Thank you very much, and good afternoon, everyone. Thank you for having me. Just so you know where I'm coming from and my perspective, I am an attorney based in Washington D.C. Have been in private practice of law my whole 25-year career here in D.C. All of it exclusively representing nonprofit organizations like the organizations that you guys represent. All different types of nonprofits, from 501c3 charities and foundations to 501c6 trade professional associations, to international NGOs, think tanks, educational organizations, advocacy groups, 501c4 issue advocacy groups, kind of all across the map. And my work with respect to these nonprofits has always been similarly kind of across the board in terms of all of the different legal and compliance issues that nonprofits have to deal with in their day-to-day operations. I serve primarily as outside general counsel to most of my clients, dealing with a very broad array, distinct array of all different legal issues that they're dealing with. These days, and I am a managing partner of Tenenbaum Law Group. It's a two-lawyer firm here in DC that my colleague Nisha and I started at the beginning of this year. For most of my career, I led the nonprofit practice at the Venable Law Firm, a large national law firm here based in DC, but have been in the small firm setting now for the past few months. And for the past month or so, my time and my colleagues' time has been spent primarily working with about 150 different nonprofit organizations in connection with two areas. One, meeting contracts, which, while this is not the focus of today's town hall or my kind of remarks here, when we get to questions, if you have questions on meetings, events, and the related contractual obligations that go along with them and the impact that the coronavirus is having on those, that is a topic that I have lived and breathed 7 days a week, about 16 hours a day for the last month, and will continue to for some time. It's an area that has a huge impact on every nonprofit, some more than others because some have more in-person meetings than others. But that's been taking a huge amount of our time and focus. And the other part, as of whatever the last week, I'm not sure what it's been since the Federal CARES Act was passed by Congress and signed by the president, have been focused very much on helping our nonprofit clients and others like you guys understand what sorts of economic benefits are available to nonprofits under the Federal CARES Act, and there are several different programs that are available to nonprofits, and helping them drill down more specifically. What do these programs mean? What are the opportunities? What are the benefits, kind of pros and cons of the different options, if you have options about which programs might be applicable to your organizations. And that's going to be the focus of today. I do want to caveat this by saying this is so new. And if you've read any press about this, what you're reading is there frankly are more questions than answers. There's some tremendously valuable and beneficial programs here in the CARES Act for nonprofits. There's no question about it. But like with any brand new, large scale, and we're talking really large scale, new federal program that never existed before, really nothing like this. There's a little bit of precedent, but really not much, especially when it comes to the small business and nonprofit eligible programs. There's really no precedent for this. There's always going to be a ton of unanswered questions, and that's what we're dealing with right now. We're literally getting more questions than answers, and it's going to take particularly the U.S. Treasury Department and the U.S. Small Business Administration some time to sort some of this out. I was just reading today that probably the cornerstone program for nonprofits in this bill, the Paycheck Protection program, was supposed to be, pursuant to the terms of the statute, nonprofits and small businesses were supposed to be able to start applying today through their local banks and credit unions and other lenders. Most of the major banks have put that on hold because they have more unanswered questions than they have answers, and they're waiting for some guidance from Treasury and SBA. And so that process is unfortunately being put on hold. There are some lenders who are moving ahead with applications, but not processing them all the way through. So I urge you to have patience, as this stuff gets implemented. There's obviously great urgency amongst kind of the federal government and these agencies in particular to get all this rolled out and to get money in the hands of small business and nonprofits as quickly as possible. But it is going to take some time. And I similarly ask for your forbearance with me today. You're likely going to have a number of questions that I frankly don't have answers to. The more that we get into this, the more that I'm helping clients kind of work through the application process, getting guidance, from what we see with applications getting approved or rejected, getting guidance from the federal agencies, which they will be putting out. We will have more answers as time progresses, but right now it's very early on, and I really don't have many of the nuanced answers that you're probably going to be seeking once you get into it. That being said, let me give you kind of a high-level overview of the programs that do exist in this bill that we are aware of, and there are certain kind of key elements of these programs that are fixed, that they're not going to change, and that's primarily what I'm going to talk about here today. And then I will stop and open it up for your questions. One more thing by way of kind of context and background, and that is that, just like I said, my practice has always been representing all different types of nonprofit organizations, particularly different categories of federally tax-exempt nonprofits. 501c3s versus 501c6 versus 501c4s or C5s. Those are probably the primary categories that apply to the folks that are represented here on the telephone. What your tax status is has a very significant impact on what program or programs you are eligible for under this new law. Not surprisingly, this was political. In fact, I was on a call yesterday with a bunch of organizations in the 501c6 kind of trade and professional association world, hearing a lot of inside baseball about how this all played out on the Senate side, literally over the weekend before this bill was passed by the Senate. It was very much political in terms of the decision to make non-501c3 tax-exempt organizations ineligible for the Paycheck Protection Program. So I know some of you on the phone, based on what I've heard from the congressman's staff, are representative of 501c6 and perhaps C4 organizations. That was a very deliberate political decision by the Senate Republicans to not make them eligible for the Paycheck Protection Program. And so unfortunately, unless and until that changes in round 4, and there will be a lot of folks reaching out to Congressman Vera and others to try to expand the program to make other categories of tax-exempt organizations eligible for that program if and when there's a fourth piece of coronavirus legislation that comes off the Hill. Right now, that is not the case. So if you can think of it like this, there are two major programs. There really are more, but there's two major loan programs that exist under the Federal CARES Act. One is the Paycheck Protection Program, which is a loan program, but it has some really unique and favorable elements to it. And then the second is what's called Economic Injury Disaster Loans, EIDL. So if I refer to EIDL, this is referred to as Economic Injury Disaster Loans. There's kind of a corollary provision to it as well called the Economic Injury Disaster Advance Loan. They're essentially the same thing with a few different features that I'll talk about. But if you can think of it like this, for 501c3 organizations, as well as some 501c19 veterans organizations, you are eligible for the Paycheck Protection Program, and you are eligible for the Economic Injury Disaster Loan, the EIDL program. And you can actually apply for both, although you cannot get funds that are offsetting the same costs. But if you're using them to offset different costs, and I'll talk about what some of those costs are, you're actually able to and should apply for both. If you are a non-501c3 or C19 tax-exempt organization, like a C6 or a C4 or a C5, you are not eligible for the Paycheck Protection Program. You are only eligible for the EIDL loans or the EIDL advance loans, which we'll talk about. The latter, the EIDLs, are not as favorable as the Paycheck Protection Program, but I'd say they're still pretty damn favorable and worth looking into. Let me make one other kind of structural distinction between the two before I get into the details. For the Paycheck Protection Program, you apply through an SBA-approved lender, bank, credit union, or other lenders. There's a lot of non-bank lenders out there. They have to be SBA approved. There's a link on the SBA Small Business Administration website as to all the approved lenders. They are supposedly working hard to expand that list as well. But for those of you who are in the congressman's district, probably most of you, you should be able to hopefully work with your existing bank, where you have a checking account or whatnot, or where you have loans through, or both. Hopefully they are SBA approved, and if not, I have no doubt you can find another local lender in your district that is SBA approved. But you apply through the bank or credit union or lender directly. Whereas for the EIDL program and the EIDL Advanced Loan Program, you apply through the Small Business Administration website directly. It's a direct loan program through the SBA. So a single application. And by the way, I have a kind of a almost like a white paper fact sheet that we put together, my colleague and I, on this on these programs. I sent that to the congressman's staff, and I'm sure that they will find a way to make that available to all of you, so you can see a lot of the details. There are also links in that document to the online application. There's also at the end some links to other sources where you can get a lot of other additional details about these different programs. So let me kind of delve into some of the details now. First, for the Paycheck Protection Program, only applicable to 501c3 or C19s or other small businesses. Of course, today's program, Town Hall, is just focused on nonprofits. So I'm just going to talk about the nonprofit eligibility. It's available to nonprofits with fewer than 500 workers. And workers, I don't think this is going to apply for most of you, where it's going to be an issue where you're wondering if you're over 500, but it's not just employees. It also can include or would include independent contractors that kind of look and smell like employees but are treated as independent contractors. So if you're not sure, if you're an organization that relies heavily on a lot of outsourced independent contractors, and you think with your full-time employees and your contractors you might be over 500, it's definitely worth getting some advice and counsel to see if you might be eligible. But assuming you're well under that, that's who's generally eligible for these. These are loans with local lenders, SBA approved lenders, but they are backed by the Small Business Administration. The loans are given up to a maximum of the lesser of $10 million or 2.5 times your average monthly payroll costs. 2.5. So for most of you, it's going to be 2.5 times the average monthly payroll costs. That's going to be your maximum eligibility for the loan amount. It includes wages for employees making under $100,000, as well as expenses for paid sick leave, health care, which is important, and other benefits during the 1-year period prior to the date on which the loan is made. So that's how you calculate the maximum amount. Repayment terms, it's a 2-year term, and the initial payments are deferred up to 6 to 12 months, and there are no prepayment penalties or fees. It's actually, our cheat sheet says a fixed rate of 0.5%, but I believe yesterday that was raised to 1.0%. I can confirm that, but I believe that just yesterday the Treasury announced that they were raising the fixed rate to 1.0%. And this is really important. No personal guarantee or collateral is required. Now, this is the most desirable and popular element of this program, and this is why they call it Paycheck Protection Program. Part of the loan, and potentially all of the loan, may be forgiven if it is spent during the first 8 weeks once you get the loan on certain operating expenses. So you have to use the proceeds for certain operating expenses during the first 8 weeks. For payroll costs, excluding any amounts, like basically if you have any employees that get paid over $100,000, you have to exclude the amount of compensation that's over $100,000 for each of those employees. Rent or mortgages for a lease or mortgage that was in force prior to February 15th of this year. Utilities, electricity, gas, water, transportation, telephone, or internet access expenses for services which began before February 15th of this year. And then group health insurance premiums and other healthcare costs. These are costs that the employer pays on behalf of its employees. These are all, if you use the loan for these expenses during the first 8 weeks, then you can have the loan forgiven, completely forgiven. And so because you can defer the initial payments, if you qualify for the forgiveness, then you don't have to pay it back at all. So the interest rate and everything else becomes a moot point. But this is important. In order for the loan amounts to be forgiven, the borrower has to maintain the same average number of employees for the first 8-week period once you got the loan, as it did from either February 15th to June 30th of last year, or January 1st to February 15th of this year. So the idea is you're keeping the same number of employees in place. The idea is to incentivize employers, including nonprofit C3s, to keep their employees. And if you do, then you can have the loan forgiven. If you have to let go some of your employees, then the loan forgiveness is reduced proportionately by the number of FTEs that you let go. In addition, the loan forgiveness amount will be reduced if you decrease salaries and wages by more than 25% for any employee that made less than 100K in 2019, annualized amount in 2019. The borrower has until June 30th of this year to restore full-time employment and salary levels for any changes that were made to employees between February 15th and April 26th of this year. And finally, it's anticipated that no more than 25% of the forgiven amount may be used for non-payroll costs, things like the rent, mortgage, utilities, and health insurance premiums. To request the loan forgiveness, you submit a request to the lender who's servicing the loan for you. And then I'm not going to get into all the documentation, but there is quite a number of documentation. And I've been dealing with clients and seeing discussions on listserv, nonprofit industry listservs and whatnot of all of the different documentation that's required, both for the initial application as well as to request a loan forgiveness. I'm not going to get into all of those details and bore you with it here, but just recognize there is, as you might expect, some meaningful documentation that's required. They're not just going to take your word for it. Things like, tax returns and W-2s and things like that to substantiate these requirements. Like I said, the loan program was supposed to open today. It has not for a lot of the larger banks and institutions. I think I remember seeing, might have been Chase, Bank of America, I think, was one of the big banks that did open, but I think you schedule an appointment and then someone's supposed to get back to you. This is if you do it through their national portal. But anyway, keep an eye on it. I expect, just like we're seeing with unemployment, insurance offices and whatnot, that there's going to be long waits. But I can tell you, just common sense would tell you, the sooner you can get your Paycheck Protection Program loan application into your lender, they're likely going to be processing them on first come, first served basis, the quicker you can get your funds. Now that's for 501c3s. If you're, for 501c3s, you're also able to apply for an economic injury disaster loan, an EIDL. And for non-501c3s, any tax exempt organization that's exempt under 501c, any of the 30 or so categories of tax exempt and under Section 501c are able to apply for an EIDL. Now, an EIDL, you can get a loan up to $2 million to cover temporary loss of revenue due to the virus. It has a repayment term of 30 years, and the first month's payment are deferred for a full year from the date of the note. In short, it's a very favorable loan. Oh, the rate is 2.75%. That's a fixed rate. So these are very favorable terms with a long repayment period, much more longer than you would typically get for some kind of a small business loan like this. But this is not a forgivable loan. It is not a forgivable loan. So that's the biggest difference between the two. But for a nonprofit that's struggling right now, like most are, it's a nice option to have. There is one thing that there's still a lot of questions about it, and we're going to be kind of updating our fact sheet to try to put more detail around this. If you apply for a loan over $200,000, there are some sort of guarantees required, either personal guarantees from individuals or putting certain collateral of the organization up, assets up as collateral to help guarantee the loan. And so there is kind of a look as to likelihood of repayment, looking at credit, things like that. That does come into play, particularly if you're taking out a loan over $200,000. And then finally, there's this kind of offshoot corollary loan called an economic injury disaster advance loan, which you can apply for in addition to the regular EIDL loan. This loan can be up to $10,000. That's the maximum. But the nice thing about it is it does not have to be repaid if you spend it on paid leave for your employees, maintaining payroll, increased costs due to supply chain disruption, mortgage or lease payments, or repaying obligations that cannot be met due to revenue loss from the crisis. And so essentially, and that's, find me a nonprofit that won't, fit one of those requirements. Essentially, it's a free $10,000 that you can get without having to repay it. And so it's almost a no-brainer for virtually any nonprofit to pursue that EIDL advanced loan. Finally, two other things I want to briefly mention. Although if you have a loan under the Paycheck Protection Program, you're not eligible to participate in either of these things. But if you have an EIDL loan, for instance, or an EIDL advanced loan, you are eligible. One is the Employee Retention Payroll Tax Credit. So even though you're all tax-exempt organizations, you still pay the employer share of payroll taxes. But this tax credit will give you a credit on payroll taxes if you are either fully or partially shut down, or a 50% drop in your revenues in one quarter of this year compared to the prior year, or a complete shutdown in all aspects of your operations. If you qualify for that, then you can get a refundable tax credit of up to 50% of your employees' wages, including health plan expenses paid by the employer, up to $10,000 per employee. So it's a nice payroll tax credit that for those particularly 501c6 or C4 organizations that are not eligible for the Paycheck Protection Program, you should look into. And then finally, and again, this is not mutually exclusive unless you have the Paycheck Protection Program loan, there's a delay of paying your payroll taxes, of remitting them to the IRS. So you can delay the payment of employer-paid payroll taxes between now and January 1st of next year, with 50% of it being due at the end of next year, and 50% of it being due at the end of the following year. I have to double check this. I might have the years wrong. It might be 50% due at the end of this year and 50% due at the end of the following year. But one way or another, it's a delay in the payroll taxes that you have to remit to the government. And again, anything that can help save money in the short term until hopefully things turn around, nonprofits can get back on their feet is certainly welcome and helpful. And then finally, like I said, when let me update this kind of fact sheet, and I'll circulate it to the congressman's staff, and they can share it with all of you guys, and I'll make sure we have accurate and current information. And then it has links to a lot of other resources at the end of the document. So why don't I stop there and see what kind of questions you guys have.
Great. Thanks, Jeff. And we will make sure that the documents Jeff's talking about are posted on our website, which is BERA.house.gov. And again, any articles and the information sheet we will post on our website under coronavirus resources. With that, Matt, do you want to facilitate questions? Matt, are you on?
I'm sorry about that. I'm happy to. Looks like we have a hand raised by Tim Murphy.
Hi, everyone. First of all, Congressman, thanks for putting the call together. Really appreciate this. Jeff, a question. So I know I run a 501c6 organization, and I know that the American Society of Association Executives are taking a hard run at Congress to get them, if there's a subsequent stimulus, to add 501c6 organizations as eligible for the PPP. Just your thoughts. I'm looking at the EIDL as an option to help cover some losses that are anticipated with the current COVID-caused recession. Would it be anticipated if I got the EIDL and then down the line the PPP is then available for my organization? Do you see any issues in being able to apply for the PPP after the fact? I think you said that if you have the EIDL in place first, you can apply for the PPP secondarily.
Yeah, so it's a great question. First off, you're right. I was on a call with ASAE's Public Policy Committee yesterday, our public policy staff, kind of a planning session, exactly what you're talking about, and particularly focused on the House side with respect to potential round 4 legislation and trying to get the PPP expanded to include C6s and C4s and other 501c organizations, perhaps with some limitations on larger organizations. So first off, obviously, I don't have a crystal ball. If that even happens, how that might be written and what sort of eligibility requirements or limitations might be, built in, who knows? Your guess is as good as mine. If it's written, if it's just a simple expansion of eligibility of the PPP to not limit it to C3s only, then the current way it works is you can apply for both, but you can't use the funds for the same things. So if you're using it for certain payroll costs for the PPP, you can't also use that to cover the same payroll costs under the EIDL. But if you have enough costs that you can, use one for some costs and one for the other, like C3s can do that right now. So absolutely.
And Jeff, just on the legislative side, since I've been part of these conversations, we are looking to include C6s in the next round. That was one that we fought for and lost, unfortunately. And again, we recognize the impact it's going to have on a lot of nonprofits.
Great.
It looks like we have a question from Shira Lane out there who has her hand raised.
Yes, thank you. And thank you, Congressman. And thank you, everybody, for putting this on. I do have a question about independent contractors and consultants. Are they considered kind of like employees or an expense that would be forgiven?
Yeah, it's again, it's a great question. This is very unusual the way it's written. This is not typically how these sorts of assistance programs are written. But for the PPP, it does state that, and that's why I referred to workers earlier, not just employees. And it does state that for purposes of 500-person eligibility limit, that you do look at workers as well. Now, whether it includes, whether the cost that it can be applied for in terms of payroll costs that count toward the loan forgiveness, whether that counts workers as well, I don't have an answer for you on that yet. I just don't know the answer to that. We have not drilled down deeply enough and haven't gone through the application process yet for any clients to be able to give you an answer on that. So I just don't know, but I know it's a very relevant question because there are a lot of nonprofits that rely heavily on independent contractors. What I gather from a little bit I did read through this, that it's not like all independent contractors are going to be counted. There's some references to basically contractors that kind of look and smell like employees, basically. It's a very unusual construct, but it's a great question. I just don't have an answer for you right now.
Great. We have a question about existing C6s in regards to the EDIL. Can you talk more about who's making the guarantee? Is it a personal one? And is there a limit before it kicks in?
Yeah, that's another great question that I was just talking to my colleague about this. We were looking into some of this. I had a feeling you would ask questions about it. And I had a question from someone else just an hour before the call. So we were looking at some of the guidance on this. And as I told her, it's about as clear as mud. It is so poorly written. And this comes from some Treasury guidance. It's very unclear. It seems to suggest that it's not just a personal guarantee that you could use. You can use some of the nonprofit's assets as collateral. But it's really not clear. We're going to try to drill down. We agreed we're going to drill down this weekend and see if we can get some more definitive answers on that, because there are a lot of nonprofits that are going to be looking for more than $200,000. And man, I can tell you, I'm sure like you guys, a lot of our clients are saying, well, I'm not doing a personal guarantee, as a staff or a board member or something like that. There are very few people who are going to be willing to do that. And so this is a critical issue. Now, if you can use the organization's assets as collateral, if you have some reserves and whatnot, or other things, like you own a building with equity or whatnot, that's a whole different story. But I just don't have great guidance for you yet.
Great. We have a question about PPP and the loan, about estimating the payroll and if future business is slow, about returning some of the unused funds, and is there going to be a penalty for that?
That's another great question. So you're borrowing, expecting to be able to use it. Well, under the PPP, so it's a loan forgiveness program if you meet those requirements. For whatever amounts that you borrowed but you could not substantiate were used for those qualifying purposes in the 8-week time period, you wouldn't have to, I guess essentially you're returning the funds. You'd have to repay them. They'd be subject to the normal repayment terms. So yes, you would have to repay them, and you'd have to repay it with interest. As I said earlier, there's no prepayment penalties. So if you were able to prepay, early without going through the full 2-year term, you certainly could. But yes, if you cannot establish that they're used for those qualifying expenses, then you would have to repay those extra amounts.
Okay, and we have a question about a small 501c3 and their ability to access this program if they only have one full-time employee and the rest are part-time employees.
That shouldn't matter from what I can tell. Again, qualifying my answer, but this is just, it relates to payroll costs, not just for full-time employees. The only limitation is for people that earn over $100,000. You can't use it toward the amount that's in excess of $100,000. But other than that, whether it's full-time employees or part-time employees, they'd all be eligible. You could apply it toward those costs, and that would be counted toward the forgiven amounts.
Are there any questions or hand raised out there? I just want to. And it looks like you addressed, there's some more questions coming through about independent contractors, and in regards to the fourth stimulus of the possibility of larger 501c3s being included. Have you heard any talk of that?
Well, right now there's no, I mean, there's limitation on the number of employees for the larger nonprofit organizations. I was reading, the PPP right now is not applicable to larger nonprofits that have over 500 workers. That's clear. I don't suspect that is going to change. I mean, the congressman could give you better insights if they think that's a possibility, but generally speaking, I would not put money on that outcome if I was a betting man. But I thought I read about some other program in the CARES Act that potentially larger nonprofits could be eligible for, but honestly, it's not something that I focused on. And can't speak to that, and I don't even know if that's essentially accurate. But I was reading about something of some other program completely unrelated to this that some larger nonprofits could potentially be eligible for. But that's all I know at this point.
Jeff, let me ask you a question that I've certainly received. If many nonprofits have already laid off the bulk of their employees, if they do qualify for a PPP loan and they're fully expecting to rehire all of those employees, but those employees may have moved on to other employment, does it have to be the same employees? Does it, or is it just based on the payroll costs?
Yeah, it's a great question. I believe, again, don't quote me on it, but I believe it just refers to full-time employment and salary levels for the changes that were made between February 15th and April 26th of this year. You have to restore the full-time number of employees and salary levels by June 30th of this year. As long as you do that, then you can get the credit for that. I don't believe it has to be the same individuals.
And that's my sense as well, but it's, again, just based on the payroll. And I think you touched on an important point. It goes all the way back to February 15th. Is that correct?
Correct. Yeah. And so it's got a kind of a retroactive element to it. Even though the law wasn't signed into law, the bill wasn't signed into law until March. It has that retroactive aspect to it, recognizing that there were a lot of layoffs that started prior to the enactment of the bill.
Great, Matt. Do we have any other questions?
That's all the questions. I'll just remind people that on your website will be these resources that were discussed, and following up, we're happy to follow up with people offline.
Great. Again, Jeff, thank you for taking time out of your day to participate and help navigate our nonprofits out here in California through what is unprecedented times. Again, be safe out there, care for one another, care for our community, and we will get through this by standing together, and we will come out of this with more resiliency. And our office stands here ready to help you navigate these tough times. Thank you again. Be safe, be kind, and be well.
Thank you. Take care. Bye.
Tommy. Thanks, and have a good night.